Hey, what's going on, everyone? Welcome to another video, and today I am going to react to Meet Kevin's latest video that he just had with Yahoo Finance. He recently had an interview, and it was a short video, short 6 minutes, but there was a lot that was said in that short 6 minutes, and so we're going to go ahead and review that, and I'm going to go ahead and give you all my thoughts. So let's just go ahead and get right into it.
That's right. We do have a special guest, Kevin Paffrath, a financial analyst, also a YouTuber whose name is Meet Kevin.
Financial analyst? Oh, no, 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 no. Oh, no, you don't. Oh, no, you don't. They just called this man a financial analyst. So let's go ahead and see what a financial analyst really is, because that ain't it. So let's look it up. Here we go. So if I go on Google and type in financial analyst, it says here, a financial analyst is a professional undertaking financial analysis for external or internal clients as a core feature of the job. The role may specifically be titled securities analyst, research analyst, equity analyst, investment analyst, or ratings analyst. Last time I checked, Meet Kevin is not a freaking financial professional or a financial analyst. They need to stop it. Yahoo Finance needs to stop it. That is ridiculous, calling him a gosh dang financial analyst. He has no clients. He's not managing anybody's money. Ross Gerber is a financial analyst. Gary Black, who he has on his channel, is a financial analyst. Meet Kevin is not a financial analyst. I understand they're trying to be nice, but let's just tell it like it is. He's a YouTuber with a huge following. That's what they should have said. Former candidate for governor and YouTuber, Meet Kevin. That's all he is. Financial analyst. Now you're disrespecting all the people who actually went to school and put in the work to actually become a real financial analyst.
You're putting all this together.
Yeah, absolutely. Look, the Ukraine issue is just fuel to the fire of what's really happening to our markets. So right now, you've got two choices. One, you think that the Federal Reserve is going to guide us into a soft landing. They're not playing the violin on the Titanic. Don't worry, everything's going to be fine. In that case, buy the dip on this Ukraine fear. It's more fear, and those are opportunities to buy. However, if you think the Fed is not going to lead us to a soft landing, that they're not going to be able to handle the wage price spiral that has just started.
Here we go again with all of this FUD. Here we go with the FUD master. Here we go. So first of all this stuff about the Federal Reserve and Ukraine and all these idiosyncrasies and secret societies and philosophies and specialities and all that wordy, big words and all that bull crap that Meet Kevin is saying, trying to sound smart. It's very simple. It's sad that you're making something so simple, so complicated. You're out here scaring people. Like, most Americans don't even know what the heck you're talking about, man. Like, come on, dude. It's very simple. I told you guys what to do. I told you guys. It's so simple. Every 2 weeks or whenever you get paid, you just dollar cost average in the stocks, because you cannot predict the future or what's going to happen next. So him getting on here, just trying to predict the future and trying to scare everybody. And, if you think the Federal Reserve is going to do this, then buy the dip. But if you think the Federal Reserve is going to buy that, then don't buy anything. Like, no. You can't predict this stuff. I mean, let me tell you how much we really can't predict this stuff. For all we know, because Biden and Putin are meeting up soon. For all we know, Biden and Putin might meet up. Everything might go well. Biden might decide not to invade Ukraine. Then next thing you know, the next FOMC meeting, Jerome Powell starts to get more dovish. And then next thing you know, the market starts going up. I mean, you just don't know. It could happen. Like, you can't predict the future. You just got to keep buying stocks regularly in phases, in small amounts over time. It's really that simple. Every 2 weeks, every month, every week, whatever you do. I personally, I buy stocks every week. Doesn't matter. Don't care. I'm putting 50, 100, 200, 300, whatever, however much I can do. I mean, I try to put anywhere between $600 to $1,000 into investing every month. That's my goal, something like that. Sometimes more. It really depends. But that's how you really invest. So all this stuff about trying to time the market, and if this happens and that happens, it's like, dude, you've got $20 million. You could have been killing the game right now. You could just be putting that money slowly into the market over time if you really believe that things are going to be so bad, instead of trying to time it and wait till things get as bad as they can, and then you hurry up and buy the dip thinking that you've won the game, when, the market has a very good way of humbling people like him. And I think that the market is going to humble the heck out of Kevin. I mean, the market already humbled him when he pulled all his money out, but as he continues to try and predict the future, the market is going to humble this guy. I'm telling you right now, it's coming. It's coming, y'all. I'm telling you.
effect on the market. But here's the thing. All you have to do is look at the balance of reverse repos, all of the extra cash that we have in our system. We've got over $1.5 trillion of extra cash floating around. And if we tighten to the tune of $90 billion per month.
Okay. Yahoo Finance just exposed themselves. They literally just played themselves. So you get on here and you call this man a financial analyst. And then, like 2 seconds later, you pull up a chart that says track record. And then you have Kevin Paffrath. And under track record, you put known as YouTuber Meet Kevin. 1.8 million YouTube subscribers. 236,000 Twitter followers. But you have the nerve to call this man a financial analyst. But under his track record, it looks like exactly what he is, a YouTuber. You didn't put anything that indicated that he's some type of financial analyst. You didn't say financial analyst for Goldman Sachs, financial analyst for Bank of America. You didn't say has $2.4 billion under asset management. You didn't say owns his own investment firm. So why are you calling this guy a financial analyst? This is hilarious. Like Yahoo Finance is starting to look like CNBC, a clown show. You call this man a financial analyst, and then your track record shows right here, he's just a YouTuber. That's it. He's a guy with a large following. That's it. Why couldn't you just say that, Yahoo Finance?
Yeah, well, I believe we have a 60% chance that we're going to go into a recession. That's because I don't believe we're going to beat the GDP comps of last year. So we'll have a technical recession, 2 quarters of negative GDP. If that occurs at the same time as inflation is still high, we are going to have a freak out in financial markets because individuals are going to look at Jerome Powell and say, hey, come bail us out. Please bail us out. And he'll say, no, sorry, I have to keep tightening. So what should people do? In my opinion, you buy when the Federal Reserve U-turns. What I mean by that is they go accommodative or they stimulate again. That's the best time to buy. Really quickly, if you did that in the past and you bought when the Fed U-turned, you would have bought March 23rd, 2020, the bottom, December of 18, the Powell U-turn bottom, February of 2009, the bottom of the recession, Q1 of 03, the bottom of the dot-com bubble, and October of 1987.
Okay, this is the definition of trying to sound smart while at the same time overcomplicating things. So I'm going to simplify this for you guys, okay? Yes, Meet Kevin, of course we're going to have a recession. You know why? Because all throughout history and throughout life, there's always going to be stock market corrections, stock market crashes, recessions, depressions. You're always going to have things like that. You always are. But the key thing here is you cannot predict it. So will Meet Kevin be right? Eventually, yeah. Will he be right this year? Probably not. The odds are against him because you can't predict this stuff. Even with all your fancy data and everything like that, you just can't predict it. So if that's what he wants to do, fine. But if you want my honest opinion, I think he's just spreading a bunch of FUD, just scaring the crap out of people. You're going to have negative GDP and it's going to be a terrible year and it's going to be a recession. So it's probably not a good idea to buy stocks this year. Absolute bullcrap. Absolute insanity. You're trying to scare people into the number one way for them to build wealth easily, just buying stocks and buying good stocks, good companies, index funds and things like that. And you're trying to scare people away from that because of your overcomplicated bullcrap. And that's not cool. That's not cool at all. That's not how you build wealth. You don't build wealth by listening to this guy. You build wealth by listening to Warren Buffett. Look how much money Warren Buffett got in the market right now. Is Warren Buffett pulling all his money out, Kevin? Is Warren Buffett getting on any of the platforms and talking all these macroeconomics and the Fed's going to do this and the Fed's going to do that? No, you know why? Because Warren Buffett is smart enough and has lived long enough to realize that you cannot predict this stuff. So you going on all these platforms and all on your YouTube trying to predict the future like you're some kind of psychic. It's just absolute insanity and it's not cool. And this is why I constantly make videos about you, because I know what you're doing. And a lot of other people have figured you out and they know what you're doing. And that's why you're getting all this hate. And you're going to continue to get all this hate until you stop and you go back to the honest person that I thought you were. I mean, who knows what you are at this point. But I thought you were honest. I really did. Go back to making positive videos. Or just stop talking about stocks altogether. Go back to real estate. That would be better for you. And so that's it. That'll go ahead and conclude this video. If you guys like what I have to say, feel free to give the video a like. If you guys are looking forward to any of my future content and want to stay up to date, then feel free to hit that subscribe button and even hit that notification bell if you really like me that much. So that'll go ahead and conclude today's video. Thank you guys so much for watching, and I will see you in the next one.